We've been sold a hidden story about taxes. It's woven so deeply into nearly every society that most people never question it. The story goes like this. Taxes are simply a civic duty, an unpleasant but necessary contribution to the systems that protect us. Pay them and the state keeps us safe, builds roads, funds schools, and maintains order. That narrative feels intuitive because we've heard it our whole lives. Yet history, economic and political, tells a very different story. A story not just about revenue collection, but about how tax systems have been used again and again to control, bind, and even subjugate entire populations. Not through armies or chains, but through legislation, levies, and the very systems meant to organize society. Understanding this history changes everything because it reveals how taxation has functioned not just as a tool of governance, but as a tool of power. And power doesn't always serve the common good. Let's strip away the illusion by starting with one of the oldest and most revealing examples, the Roman Republic and Empire. Rome didn't build its system overnight. It evolved from a simple levy on citizens to an immense apparatus that reached every corner of Europe, North Africa, and the Middle East. At first, taxes in Rome were straightforward: property taxes, tributes from conquered territories, and levies on trade. You paid based on your land, your wealth, and your commerce. But as Rome expanded, so did its appetite for control. The Republic became the Empire, and the Empire became an institution that collected taxes not just for roads and aqueducts, but for legions, for gladiators, for the luxurious lives of the elite. The twist is that Rome didn't need shackles to keep people in line. It used obligation. A farmer in Gaul didn't wake up to find soldiers at his door. He woke up to find that a portion of his entire year's harvest was legally claimed by Rome. That levy wasn't just about money, it was about leverage. Repay allegiance with output, repay submission with goods. If your fields failed, Rome didn't forgive you. Interest and penalties piled up. What began as a duty became a burden. With each passing year, more families lost land not because of war, but because they couldn't pay what the law demanded. Over time, they became tenants on what was once their own ground, beholden not to nature or neighbors, but to a fiscal authority that dictated their survival. The Roman system didn't just raise money, it reshaped society. Freed citizens became dependent workers. Independent farmers became tenants, and those who resisted found themselves taxed, outsourced, or displaced. Through taxation, Rome didn't just expand its coffers, it expanded its influence deep into the lives of those it ruled. This pattern repeats throughout history, often in ways we overlook because the language of taxation sounds everyday, harmless, even normal. But if you dig deeper, the dynamics are eerily similar. Fast forward to medieval Europe, where feudal lords levied taxes on peasants for the mere right to live and work on the land. These weren't taxes for services like courts or roads, these were tributes demanded for existence itself. Every crop harvested, every animal raised was subject to the lord's claim. The system was so embedded that peasants rarely saw it as coercion, they saw it as life. Yet the effect was clear: a population bound by financial obligation with limited mobility and little chance of autonomy. Jump ahead to the colonial era and the mechanism becomes even more evident. Colonial powers extracted taxes from their subjects not to fund local services, but to fund distant monarchs, faraway wars, and the luxury of elites who never set foot in the lands they taxed. In British India, for example, land taxes were demanded annually, irrespective of weather, harvest success, or local conditions. If rains failed and crops died, the tax still stood. Failure to pay meant forfeiture of land, imprisonment, or forced labor. Entire villages were immobilized, not by physical chains, but by fiscal decree. This wasn't accidental, it was systemic. Tax codes were designed to guarantee revenue flows, and revenues meant power. Those who controlled the tax law controlled the people. The American Revolution, often framed as a fight for liberty, had deep roots in resistance to taxation without representation. The British Crown taxed tea, paper goods, and imports, not primarily to fund colonial services, but to assert a kind of extractive sovereignty. The colonists rebelled not because taxes existed, but because they existed without consent, a fundamental denial of agency. The answers reveal priorities and power structures more clearly than any political manifesto. Industries with lobbying strength secure exemptions. Wealthy individuals and corporations employ armies of accountants to minimize contributions. Wage earners, small businesses, and the working poor shoulder a disproportionate share. The result? A system that claims to be equitable but functionally entrenches inequality. Look at today's global tax environment. Corporations with global footprints can shift profits to jurisdictions with minimal rates. Individuals with wealth can exploit loopholes designed by specialists whose job is to minimize taxation legally. Meanwhile, the average citizen has none of these options. They receive a paycheck and a portion is automatically claimed, regardless of their financial strategy or needs. This is why taxation isn't just a fiscal tool, it's a mechanism that shapes incentives and dependency. When people feel they have no choice but to comply with a system they don't control, compliance morphs into constraint. Free societies become societies constrained by financial obligation. There's a subtle but powerful form of social control embedded here. If you depend on the system for employment, healthcare, legal protection, or social services, and the system extracts much of what you produce, then your livelihood becomes tied to compliance. Step out of line, and the mechanisms of the state, taxation, penalties, and enforcement, constrain you. You may not be in chains, but your choices are limited. And yet, this story is rarely told in straightforward terms. We hear about services at the receiving end of taxes: schools, hospitals, infrastructure. Those are real and important, but we rarely hear about the balance of power that tax law creates between the state and the individual. Because if you only focus on services, you miss the deeper dynamic. Tax systems don't just fund a state, they authorize the state to shape society in its own interests. They grant power not only over resources, but over behavior, mobility, and opportunity. This isn't to say all taxation is inherently oppressive. Civilized societies do require mechanisms for collective funding, but the difference lies in who defines the rules, who benefits most from them, and who bears the cost. When taxation is used to level the playing field, to fund public goods, redistribute concentrated advantages, and support basic human dignity, it can strengthen a society. But when it's structured to funnel value upward, obscure accountability, and bind populations to systems they don't influence, it becomes a tool, not of freedom, but of subtle domination. To recognize this, look at the mechanics of modern tax codes. Look at the exemptions for certain activities, the loopholes accessible only with elite counsel, the ways in which wealth is sheltered while wage income is taxed at higher effective rates. Notice which groups have influence over crafting these codes, and you begin to see the invisible architecture of power. More importantly, ask this: does the tax system encourage genuine productivity, innovation, and equitable contribution, or does it create dependencies on employment, on systems people cannot influence, and on financial flows controlled by elites? History shows that when populations are bound financially without power, they lose autonomy. Whether in ancient Rome, feudal Europe, colonial empires, or modern nation-states, the pattern persists. Tax systems often enforce compliance, extract value, and shape societies according to the priorities of those who write the rules. Recognizing this isn't cynicism, it's clarity. It's seeing beyond the comforting rhetoric that taxes are purely civic duty and understanding how they function within real power structures. When you grasp this, you begin to ask different questions. Not just how much tax you pay, but who determines the tax system, who benefits most from it, and how you can ensure that value flows support equitable participation rather than containment. That change in thinking isn't about rejecting taxes entirely, it's about demanding systems that serve people rather than bind them. Because slipping into bondage rarely looks like shackles and chains. More often, it looks like obligation, complexity, and dependence, all wrapped in legality. History doesn't repeat, but if you don't understand it, it will shape outcomes you never intended. If this opened your eyes to something deeper about tax systems and power, hit subscribe. There's a lot more hidden beneath the surface, and I'll show you where to look.